Now that we have a good little reminder of what our candlesticks are, let's jump into some pattern recognition and see how they look a little bit different inside the Bollinger Bands. So when we think about patterns, understand that patterns rule. It's long been held that price patterns provide the best setups for trade entries. We've always been looking for these price patterns. They're great to identify those little moments of trading behavior, and then you enter in the breakout on that. Now, one of the challenges of price patterns is the fact that the market is not absolute. The market's relative. That's the great benefit of the Bollinger Bands. Bollinger Bands provide a great structure because they're relative rather than absolute. Now here's what a pattern does. If you go back to our Foundations of Stocks and Options training and you hear my teaching on the purpose of patterns, you're going to remember that patterns, all patterns, are short-term periods of consolidation. Now, those patterns may turn into reversal patterns, they may turn into continuation patterns, but in that moment, it is a period of consolidation. In other words, it's contraction. The trend is no longer moving, it's contracting for that moment. Guess what? That's exactly what Bollinger Bands recognize. They recognize that contraction of momentum. So bands naturally fit into this mold. Now most patterns, this is a distinction you're going to find with Bollinger Bands, most patterns end up looking like M's and W's. Now this is a slight departure from what you've probably learned about patterns before. Typically when we talk about patterns, we talk about terminal patterns, double tops, double bottoms, and whatnot. Those still show up in the Bollinger Bands, but it's different. What you see in the band is usually going to represent an M or a W because the band is really tracking that intermediate level trend. So I'm going to show you this here. They're typically going to look like M's and W's. And then the other thing you need to recognize is %B. The %B indicators are a really nice complement to identifying these patterns. So let's talk about M's and W's. M's and W's are smaller variations of double tops and double bottoms. They're really just a fractal of the double top and the double bottom. They're very common. We see them all the time. And Bollingers, of course, provide a really good framework to start identifying those M's and the W patterns. Let's look at a couple here. This first example that I've got is a traditional double top. This is a large pattern. You see how it's spread out over several weeks here. It's a terminal pattern. It terminates that preceding trend that was a pretty good sized trend. Now, let's go take a look at an M and W inside the bands and look at the difference here. This is a much smaller pattern. There's a W over here on the left, and then there's an M. They did, in both cases, terminate the preceding move, but it was not a long-term trend necessarily. This was a much smaller level. And a lot of times when you see M's and W's in Bollinger Bands, they're going to be a lot smaller of a move. Just get used to that because it's still a really valuable signal as you're going to see here. Let's make a couple of distinctions as we talk about the M's and the W's. First of all, M's and W's reflect the end of a swing. And so you're going to start to see these M's and W's, and what was usually a burst of energy, probably coming out of a squeeze, for example, has now turned into a brief moment of contraction or a brief moment of consolidation. Now that may lead to another squeeze, but not always. A lot of times it leads to some other formation. That's why it's valuable to recognize them here. So M's and W's help identify the turning points, and very often, of course, they're going to show up with the reversal pattern that we see with the Bollinger Bands as well. Now let me get into a kind of a new divergence of patterns here. I want to introduce you to a guy named Arthur Merrill. Arthur Merrill, back in the 1960s and then with a republishing in the 1980s, identified 16 variations of M patterns and 16 variations of W's. These are not your traditional double tops and double bottoms, but rather they're 5-point patterns inside a move. And there's various ways that they can play out. The idea here is to identify what these little 5-point moves are inside a pattern. So his work has become very popular and famous in technical circles because of the way that it helped to identify patterns. I want to just kind of briefly touch on them here with you. What John Bollinger's identified is he's identified that the bands are a really great way to start recognizing these M and W patterns. And when you pair it up with Merrill's work, it provides a really powerhouse identification of patterns here. So a full understanding is really going to help you. We don't have time in this program to go into a full treatment of the Arthur Merrill work, but this will give you at least a good jump start, and you can see an idea of it here. On the next screen, what you're going to see is you're going to see these 16 M patterns here. Take a look. Let me give you some bullet points here. First of all, there's 16 variations. The M's can combine. This is what I was trying to say. They're not all just double tops and bottoms. They can combine to create more complex patterns. For example, a head and shoulders. It may combine to create part of a three-wave move of a Elliott cycle. But they're just little moves of 5-point swings that Merrill has identified here. Here's the distinction of an M pattern. The distinction is the last leg of an M pattern is a down leg. The last leg is a down leg. And the way he's categorized them is it's a progressive order with M1 representing strongly falling and M16 representing a strongly rising pattern here. So take a look. I'm not going to talk through each of these, but you can just see, if you look at M1, we've got a falling pattern here, and M2 is still falling, but maybe not quite as strongly because the fifth wave here, last move, is not as low. And you can kind of keep identifying this. By the time you get all the way down here to M16, we're in a strongly rising pattern here. M15 similarly. And you can look through these. If you look in kind of the middle here, a lot of these are kind of sideways moves. Some of these actually look like triangles. For example, the M9 pattern starts to look like an expansion there. M10 kind of looks a little bit similar there as well. And so here's the idea that these are just variations of 5-point swings that will show up, and a lot of times you'll be able to identify them very clearly inside the Bollinger Bands. Now if we flip those, we get the W patterns. Take a look here. There's again 16 variations of the W patterns. Again, they can combine to create more complex formations. Here's the distinction. The last leg of a W is an upward leg. And just like the M patterns, the progression is with the W1 representing falling. Take a look at the pattern. It's going downhill here. And the W16 representing a rising move. So if you go all the way to the far right lower corner, W16 represents a rising move. Now, what's the purpose of these patterns? Do you need to memorize them? You probably don't. The truth is, if we were to sit here and have a quiz, there's no way I would tell you the individual moves. But the idea is to see that there's a lot of variations of these W and these M patterns, and they do show up inside the bands. Let's take a look at a couple setups, and then we'll look at a couple of examples of how they show up here. So the first one I want you to see is the setup for the M pattern is going to be, the ideal setup is a first push that is at or outside the band, and then we get a pullback that is often to the middle band, and the second push falls short. This is very important right here. You see that first push, the pullback, and the second push falls short. What's interesting is the second push isn't necessarily a lower move. It's just lower relatively because the band has gone on to another level there. And so it's important to identify that. This shows weakness in the move, and it very typically turns into a reversal there. Usually marks the end of the swing. Now let's take a look over here, and let me show you what I'm talking about. We were in a nice little trend here. Look at your M pattern here. We're at or slightly beyond the band. The second part of the M does not touch the upper band. And of course that terminates that swing there. This is a nice little M pattern. Now the W patterns are going to be very similar. They're just going to be in the opposite orientation here. So again, the setup is the first push is at or outside the lower band. The bounce often comes to the middle band, and then the second push turns above the lower band. In other words, it can't make it back down to the lower band. Again, this usually marks the end of a swing. These are really valuable patterns to recognize. Take a look here, and I'll show you how this one's set up. So the first push is outside the lower band. The second push comes up here, or I should say the bounce comes up here, almost hits the 20 period, and then it pushes again. And notice we're not getting into the lower band. You see the divergence happening with your %B. And then watch what happens. We have another move where, again, we're not even close to the lower band. Now what you have here is you have two W's. This is what I'm talking about with combining them. We've got a W2 and then followed that with a W14. So you really have a head and shoulders, but the head and shoulders itself is not as easy to see as maybe the two W patterns together. But together, all of it does turn into a reversal. So these are very powerful patterns to recognize. And again, you don't need to memorize them all. Just learn to see them inside the band and see this movement. If you can identify, hey, the first push went outside the band, The second one did not. That's what you really need to identify. And again, what I want to show you here, look, just because it didn't make it to the band doesn't mean it was a higher move. This one was a lower move, but still further inside the band. That's great. That's a great signal you get from the bands, is the fact that it's relatively speaking not as low. Even though it was a technically lower low, relatively it's not as lower low. That's one of the great signals we get from the Bollinger Bands here. Now there's another thing I want you to understand about the M and the W patterns. It's kind of almost mystical, but it's really not, and that is their fractal relationship. If you've ever seen me teach anything about Elliott wave or market fractals, you realize that markets move in a fractal relationship, which means there's a picture inside a picture inside a picture, and usually they're pretty similar. They may not always be identical, but they're very similar in formation here. So what often happens with the M patterns is we have a fractal inside a fractal. Let me show you what I'm talking about. One of the reasons M's and W's work is because of fractal theory. They often represent a pattern inside another pattern. And one of the reasons the bands are powerful is because they show the relative nature of the move. Let me show you in practice here. So take a look at this chart of the Dow Jones, and right here in the middle of October 2007, notice there is an M that occurs. Now this is pretty small relative to the overall chart, but if you look at how this plays out, it's exactly what we talked about, a push right to the upper band. The second push fell short of the upper band. Look at your percent B. That is the M pattern that we're talking about. In fact, this is, we can name this is an M14 formation. Now again, I don't care if you call it the right name. If you walk up to me on the street and say, that's an M14, I'm going to look at you and say maybe, or I'll just say probably, not to make you feel bad. I don't know all these things by heart, and I don't think you have to either. You just need to recognize them in function. Now watch what happens here. I'm going to circle this, and watch this. This M pattern is actually the left peak of a larger M. Do you see how that fractal is happening there? Now this M pattern that I've just highlighted here in blue, it's a scale larger. We've gone from a minor level more up to an intermediate type of a M, and now this is actually an M3. So we had on the left peak of the larger M pattern, we had a smaller M. So on the left peak of the M13, we had an M14, and this M13, watch this, this is actually followed by another M pattern, which make up the peaks of a head and shoulders formation. And of course the head and shoulders could be broken down to two M variations. And so if you go to the largest level here, you've got the head and shoulders. Watch this, I'm going to zoom out. There's your head and shoulders in context, and by the way, that was the market top of 2007 moving into the crash of 2008. And so it's interesting that if you keep taking this fractal up, on the smallest level, we had that first M, the ones that we talked about where you say, hey, it's terminating that little short-term move. Turns out that was the left peak of a larger M, which turns out was the head of a big head and shoulders, which turned into a full-on market reversal. That's what I'm talking about when I say fractal relationships. M's and W's very, very often become part of a fractal picture. Usually you can track it for about 3 levels of the fractal, sometimes 4, but usually it's about 3. And when you can see it, you can start to get some really interesting optics for the overall market.